Hello, today is Monday, March 8th. This is a Sphinx Forex review for today. We'll do the housekeeping first. SphinxForex.com. You have the latest in fundamental and technical analysis here in the left corner, or no matter which tab you choose, you'll still have this information available. The videos, most recent video will be in the main screen, but however all the rest of them are indexed. If you click the video link, you're interested in a book, click this link. Real-time quotes and economic data can be found on here. If you're interested in a mentorship program, just click here and shoot us an email. The Signal service, hopefully in the next week and a half or so, we'll be ready to roll with that. So let's go ahead and get going. Twitter.com/Sphinx Forex. You can see we're now over 1,000 followers, so we're putting effort into that, so we'll probably scale back now with that. And so let's go ahead and get to the charts. Before we start with the daily, I'm going to review what happened with the long-term trade I called yesterday. This is where the candles were when I made the call. This is on an hourly chart and a pound dollar. This candle here did bring you into the trade if you took the aggressive approach. I'm not going to take credit for a win or a loss or whatever, because this isn't technically a textbook trade. However, I did say if you were of the aggressive nature and you did not want to wait for the candle to pierce through the low EMA, you could have went long. This candle brought you in. It got you in at 51.66 is what I called. The high was 94, so roughly it was 28 pips before we came back with a reversal. This is due oil and gold just fell off the cliff during the U.S. It climbed high during the European session, which is the move you're seeing up here, and then it just crushed down in the U.S. session. I mean, it just fell through the floor. So that's why you had the reversal. Even though there's a good-looking trade here, we weren't below the EMA, the MACD yet to go short on a new low here. Kind of wish you would, because it's a very smooth move that's still going. So that was what happened. That was the only trade we had. And then let's go back to a 15, and then we'll look at what happened. Here's when the market, the MACD was pretty extended over here. So I don't know about all of these highs, even though they were going to work out eventually when you got to this move here. I don't like that big old move here setting up your other trades. So I kind of would have just laid off of that currency. MACD finally came to the through the zero line to the low side. 1 pip below here would be your entry. 1 pip above here would be your high. You got brought in on this candle. Once this candle brought you in, your stop wasn't remotely compromised, and then a huge move down. So you caught that move there, and then that's a pretty big same situation as over here. So I don't know if I'd have taken another short. Looks like it have worked out, but again, that's a pretty much probably news-based candle, so I wouldn't have not taken another move off of there. Let's look at the euro. MACD came across to the long side. 1 pip above, here's your entry. 1 pip below, here's your stop. You got brought in roughly in this area here. Then you had to move up, so you made your money there. If you missed the first trade, you had a second one. 1 pip above, here's your entry. 1 pip below, here's your low. You got brought in here. Stop wasn't compromised. Bang. Caught your move. This was a European session. Then the U.S. session came on. MACD came across. This is aggressive entry. 1 pip below here. 1 pip above here. Not a textbook, so I'm not going to take credit for a win on this trade. However, if you have your aggressive nature, you didn't need to wait for the candle to pierce, the wick to pierce through the upper EMA. Then you had a reversal. I'd have stayed away because the MACD crossed long. Then it came short again, and then we flattened out. The euro yen. Pretty big move here. I wouldn't have touched that off of a new high. MACD came across the zero line to the short side. 1 pip below here would be entry. However, nothing happened. The MACD went long, so it knocked off that one. Came short. 1 pip below, here's your entry. 1 pip above, here's your stop. Here's your entry. You missed this one. You had a second chance. 1 pip below here is your entry. 1 pip above, here's your stop. Finally got brought in. Bang. So you'd still be in the trade if you were going with it. And then we'll look at the dollar Swiss. Here's where the market actually opened. You see the gap in the candles. This is where it came on Sunday evening. 1 pip below, here's your entry. 1 pip above, here's your stop. This candle brought you in. Nice move. Bang, caught it. You missed it and you're an aggressive nature. 1 pip below, here's your entry. 1 pip above, here's your stop. One smart thing to do, because that's so close, would be to use the same stop. However you didn't need to, bang, you caught your move there. So there was your money. MACD came long, then it came back short again. This isn't a trade because the MACD was still to the high side. We came back long, and then we flattened out. So, all right, that's it for today. We'll see you tomorrow.